What credit score do you need to buy a house? This is one of the most Googled real estate questions out there, and the answer is probably not what you think, because there is no single magic number. It depends on the type of loan you're getting and what terms you want. But I'm going to give you the complete breakdown today, including the minimum scores for every major loan type. What happens if your credit score isn't there yet, and how to improve it faster than you think. Stay until the end because I'm going to share the one thing that moves your credit score the fastest. Hey guys, Kami Ketcham here with Ketcham Realty Partners. I'm a real estate broker serving Orange County and Los Angeles, California, as well as Las Vegas and Henderson, Nevada. Today we're talking credit scores because this is something that stops a lot of potential buyers in their tracks, and I want to make sure it doesn't stop you. Let's get into it. First, let's talk about why your credit score matters so much in the home buying process. So your credit score is essentially a numerical snapshot of how responsibly you've managed debt in your life. Lenders use it to decide two things: whether to lend you money at all and at what interest rate. So that second part is really important. Even if two buyers both qualify for a loan, the one with a higher credit score gets a lower interest rate. And on a 30-year mortgage, even a difference of 0.5% in interest rate can mean tens of thousands of dollars over the life of the loan. Your credit score literally costs or saves you real money, not a small amount either. So understanding where your score is and how to optimize it before you apply for a mortgage, it's one of the smartest things you can do as a home buyer. Let's quickly establish what the credit score ranges actually mean so we're all on the same page. Credit scores range from 300 to 850. Here's how lenders generally categorize them. 800 to 850, exceptional. You will get the best rates available. 740 to 799, very good. You'll qualify for excellent rates. 670 to 739, good. You'll qualify for most loan programs at decent rates. 580 to 669, fair. You can still buy a home, but your options and rates are more limited. Below 580, poor. Most conventional lenders won't work with you, but there may still be options. Most people fall somewhere in the good to very good range. And the good news is that even if you're in the fair range, you are not necessarily locked out of home ownership. Okay, let's get specific. Here are the minimum credit scores for each major loan type. Conventional loans. Most lenders require a minimum score of 620. However, to get the best rates on a conventional loan, you really want to be at 740 or above. Below 680, you'll start seeing higher rates and additional fees. FHA loans. This is where it gets more accessible. With a score of 580 or above, you can put down just 3.5%. With a score between 500 and 579, you can still get an FHA loan, but you'll need 10% down. Below 500, FHA won't work. VA loans. The VA itself doesn't set a minimum credit score requirement, but most lenders who offer VA loans want to see at least a 580 to 620. If you're a veteran with a lower score, it's still worth talking to a VA specialized lender because there's more flexibility here than with conventional loans. USDA loans typically require a 640 or above for their automated approval process. The bottom line, if your score is 620 or above, you have real options. If it's 580 to 619, you have FHA options. If it's below 580, the focus right now should be on improving your score before you apply. To understand how to improve your score, you need to understand what actually goes into it. Your FICO score, which is what most mortgage lenders use, is made up of 5 factors. Payment history is 35% of your score. The biggest factor by far. Paying your bills on time every single month is the single most important thing you can do for your credit. Amounts owed is 30%. This is your credit utilization ratio, meaning how much of your available credit you're actually using. More on this in a minute because this one is really important. Length of credit history is 15%. How long have you had your accounts open? This is why financial advisors tell you not to close old credit cards even if you don't use them. Credit mix is 10%. Having a variety of account types like credit cards, auto loans, and student loans. New credit is 10%. How many new accounts or hard inquiries have you had recently? Opening a bunch of new credit cards right before applying for a mortgage is a big no-no. Or buying a new car and taking out a car loan right before you close escrow. Don't do it. This is so much info, I know. To help, I have a free gift for you. It's my complete home buyer checklist, and it walks you through every single step of buying a home, from pre-approval all the way to closing day. Just a clear, simple action plan you can actually follow and check off as you go. It even warns you about the most common mistakes buyers make at each stage so that you don't have to learn the hard way. It's completely free. Link is in the description. Go grab it right now. Okay, so what if your score isn't where it needs to be? Here's what actually moves the needle. Pay every single bill on time. Set up auto pay if you need to. One missed payment can drop your score significantly, and it stays on your report for 7 years. This is non-negotiable. Lower your credit utilization. This is the fastest way to move your score, and I'll share the specific tip at the end of the video. Your utilization ratio is how much of your available credit limit you're using. If your credit limit is $10,000 and you have a $4,000 balance, your utilization is 40%. Lenders like to see this below 30%, ideally below 10% for the best score impact. Paying down balances moves this number fast. Don't open any new credit accounts. Every time you apply for a new credit, a hard inquiry hits your report and temporarily lowers your score. In the months leading up to a mortgage application, do not open new credit cards, finance a car, or do anything that requires a credit check. Don't close old accounts. Closing a credit card reduces your available credit, which increases your utilization ratio and can shorten your credit history. Leave old accounts open even if you're not using them. Check your credit report for errors. You are entitled to a free credit report from all three bureaus, Equifax, Experian, and TransUnion at annualcreditreport.com. Errors on credit reports are more common than you'd think, and disputing and correcting them can improve your score quickly. Let me show you why this really matters with real numbers. Let's say you're buying a $500,000 home with a 30-year fixed mortgage with a credit score of 760 or above. You might qualify for an interest rate of around 6.5%. Your monthly payment on the loan portion would be roughly $2,528. With a credit score of 620, your rate might be closer to 7.5%. Your monthly payment jumps to $2,797. That's a difference of $269 per month. Over 30 years, that's $96,840 more that you pay just because of your credit score. Nearly $100,000. That is not a small number. This is why taking even 6 to 12 months to improve your credit score before buying can absolutely be worth it financially. Now, this brings up the question, if my score isn't perfect, should I wait and improve it or just buy now? Honestly, it depends on your situation, and there's no one-size-fits-all answer. If your score is below 580, yes, focus on improving it before you apply. You'll have much better options in 6 to 12 months. If your score is between 580 and 639, it's worth having a conversation with a lender because depending on the program, you might be able to buy now, and the benefit of getting into a home and building equity might outweigh the slightly higher rate. If your score is 640 and above, you have solid options right now, and waiting might not make financial sense, especially if home prices continue to rise in your market. The best thing to do is talk to a lender, get your full picture, and make an informed decision. That's what my free calls are for. I can connect you with the right lender for your specific situation in California or Nevada. Okay, I promised you the one thing that moves your credit score the fastest. Here it is. Pay down your credit card balances to below 10% of your credit limit, not 30%, 10%. This is called optimizing your credit utilization, and it is the single fastest legitimate way to boost your score. I have seen clients improve their score by 40 to 60 points in a single month just by paying down credit card balances before their mortgage application. It is that powerful. If you take nothing else from this video, take that. Pay down those balances. There are also great companies out there that help you repair your credit. I have seen them make tremendous differences within a few months of my clients utilizing their services. Subscribe for my next video where I walk you through exactly how to get pre-approved for a mortgage and what to expect during that process. Before you go, I want to make sure you have something really valuable, my free home buyer complete checklist. It covers every single step of the buying process in plain English, tells you exactly what to do and when, warns you about the mistakes most buyers make at each stage, and gives you space to track your own dates and deadlines so nothing slips through the cracks. I designed it specifically for buyers who feel overwhelmed by the process and want a clear, simple roadmap they can actually follow. It's completely free. Download it at the link in my description. And when you're ready to take the next step and talk about your specific situation, my scheduling link is right there too. I'd love to help you make this happen. I'm Kami Ketcham. See you in the next one.